Welcome traders to today's video from Admiral Markets. This week starts off slow with the market due to the public holidays in the UK and US, but it doesn't mean that our webinars will be slow because we have the usual schedule, of course. We're going to take a look in this video particularly at the euro dollar, pound dollar, dollar yen, and AUDUSD setup, but also let's take a look at the webinars of in the last week of May. First of all, though, the disclaimer explaining that the online material here is developed by Admiral Markets for a global audience. Please take that into account that the info in this session may not be suitable for everyone. To get the corresponding info on charting conditions and other details, take a look at admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, trading for exchange and global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that, and this webinar is for educational purposes only. Please pause the video to read the entire disclaimer, and we do thank you for your attention. So I already mentioned the webinars, of course, as always, continuing this week with the weekly Forex recap from Nenet coming up this Monday. And then, of course, tomorrow, live trading lab, reversal trading. Wednesday, we have Forex strategy and expert advice. And Thursday, we also have a pro learning lab, how to measure the strength of a breakout. So a lot of stuff. Hope to see you in one of these webinars, or maybe all of them would be great because we have a lot of good stuff coming your way. Our first focus of the day is the euro dollar. We had the signs of a falling wedge, but it's not something particularly of interest for me necessarily today because of the lack of liquidity or lack of movement I expected due to the bank holidays. But we do see some movement. We do see a break of this falling wedge, so that could be a first indication of some bullishness here on this euro dollar. On the 4-hour chart, maybe specifically on the daily chart, we can see that price is close to some support levels at 136. So that could be a bouncing spot for more upside. Now, obviously, if we break the resistance here at 137, that would be an indication of potential upside here up to 139, the next top, in fact. However, looking from a weekly perspective, we definitely see a bearish momentum candles here, 3 in a row with lower lows and lower highs and lower closes. So any retracement of that candle that doesn't break 137.20, although there could be some upside, is a potential retracement of a weekly candle for more downside. And we can see maybe weekly candles continuing to build to the downside until we reach a bigger resistance here on the weekly chart, which is this bottom on the weekly at 134.75. So that remains to be seen. On a weekly level, the candle high of last week is at 137.20. That remains a pivotal point for this week. If that breaks, then there's a good chance, of course, a good probability of upside. If it doesn't and price actually goes up and respects that level, we will have a decent probability of some more downside pressure to follow through. So that remains in key observation, a key level. If we then zoom into the hourly chart to keep that level in mind and view this particular situation, we do see that falling wedge, but all price could do is maybe retrace back to resistance and use that level for more downside. So, of course, always realize that price action is very useful as confirmations, either for more upside or indeed whether price breaks or bounces when we get closer to the green trend line and the red horizontal resistances. Price action and candlestick formations will provide that confirmation of which of the two seems more likely. If we look at the bigger picture, though, before moving on to the pound dollar and comparing the EU here with the GU, of course, these two are quite correlated, of course, so it's always good to keep an eye on both. We can see that the euro dollar actually pushed out of this uptrend channel, and there's the main difference here with the pound dollar, where price you can see still very firmly in this uptrend channel. And also when looking at the candlesticks themselves, we see the pound dollar last week posting higher highs and higher lows on the weekly candles, also a higher close. And the euro dollar, of course, had the opposite. It had clear lower highs and lower lows. So there's definitely a substantial difference. Now the pound dollar weekly chart does have a big wick here. So although the bears were not in control, I wouldn't say the bulls are in control either. And that's a bit of a mixed picture here on the pound dollar when you look at this daily chart. Still entrenched in the uptrend channel, but not sure which direction this is. Actually, it looks more and more like a triangle. We do have a couple of bearish candles on Thursday and Friday, but this is starting to look like a build potential of a triangle. We'll have to see. Of course, if it breaks to the upside, obviously that would still be with the trend momentum here. If we break to the downside, there's some space back to the bottom of the channel, but what we're looking for really, if you're bearishly oriented, is a break of the bottom here and a break of the channel. Then the downside should be getting more fuel as the stronger support gets out of the market. Now let's take a look at the AUDUSD. The AUDUSD had a very bearish candle, in fact, last week. Obviously, this candle is pushing through this uptrend channel, the daily uptrend channel, as if it wasn't there. Very powerful close below it and very powerful candle, bearish candle. So any retracement of that candle is a high likelihood of a retracement for more downside, and it would really need a break of the high this week here, of last week, this week, of 93.70 to change that analysis. Now, of course, if this week would be a bullish candle, we have to review it next week again. Otherwise, looking like a bearish setup here. Now, the break of the bottom here at 92 is important because that's still a horizontal weekly level that has held price last week. So we need a break of last week's low and that level for a real serious downside here on the AUDUSD below 92 with targets, for instance, at, well, let's take a look at the daily chart. If we put a fib on that downside here, we see the price respected the 78.6 fib. Those targets line up at minus 272, minus 618, at 91.30 and 90.38. Until then, we do know that price is at a support level basically, so there could be a bouncing spot as well for more upside, right? Because that's what horizontal levels and supports can do. That's why it's good to keep an eye on not only 92 but also on these top lines here. Price breaks through those resistances, there could be some retracement of that weekly candle right before we maybe get that downside. So something to keep an eye on. Upside to retrace part of that weekly candle before we might get a bigger downside. Last but not least, we always keep an eye on the dollar yen, but I have to admit I'm not too interested in this pair. A lot of choppiness, 4.5 months of consolidation, or 5.5 months in fact. And if you look at the weekly chart, we did bounce a bit off this horizontal level, obviously with a good bullish candle. That bullish candle, though, might see some upside again to the resistance. All in all, though, very choppy and sideways move. Not too interested in the entire structure. Well, folks, that wraps it up from our side here today. Thank you so much for joining this webinar, and look forward to see you in all the webinars here at Admiral Markets very soon. Good trading, and have a great week. Cheers.